Oil, transportation, food ingredients, and other raw materials prices have declined in recent months as the effects of the pandemic and the war in Ukraine have worn off. Some of the world's largest corporations have stated that they do not intend to shift direction and will continue to raise prices or keep them at high levels for the foreseeable future. As a result, some economists say, Federal Reserve policymakers may feel obligated to keep rising interest rates, or at the very least not cut them, increasing the risk and severity of an economic slump. PepsiCo revealed at the end of April that it had hiked the average price of its snacks and beverages by 16% in the first 3 months of the year. PepsiCo's Doritos bags, Tropicana orange juice cartons, and Gatorade bottles are all significantly more expensive. According to FactSet, a statistics and research agency, the average company in the S&P 500 stock index boosted its net profit margin from the end of last year, defying Wall Street experts' projections that profit margins would decrease somewhat. While margins are still below their high in 2021, economists expect them to expand further in the second half of the year. For most of the previous 2 years, most businesses had a perfectly good excuse to go ahead and raise prices, according to Samuel Rines, an economist and managing director of Corbu, a research firm that serves hedge funds and other investors. Last spring, the Producer Price Index, which gauges the prices that businesses pay for products and services before selling them to consumers, reached a high of 11.7%. For the year ending in April, the rate fell to 2.3%. The Consumer Price Index, which gauges the prices of household goods and services ranging from eggs to rent, has also been declining, albeit at a far slower rate. It fell to 4.93% in April, from a peak of 9.06% in June 2022. Carbonated beverage prices increased roughly 12% year over year in April. Inflation will remain much higher than it needs to be because companies are greedy, said Mr. Edwards of Societe Generale. Since the spring of 2021, some economists have argued that when households recovered from the epidemic, demand for products and services, whether garage doors or cruises, was left unsatisfied due to lockdowns and constricted supply chains, driving up costs. David Beckworth, a senior research scholar at George Mason University's right-leaning Mercatus Center and a former Treasury Department economist, said he was unconvinced that the quick pace of price rises was profit-led. As customers were bombarded with news about economic imbalances, corporations had some cover for hiking prices. However, Mr. Beckworth and others argue that higher pricing would not have been conceivable if individuals were not willing or able to spend more money. In this analysis, government stimulus payments, investment profits, wage rises, and mortgage refinancing at very low interest rates play a stronger influence in increased prices than business profit-seeking. It appears to me that many telling the profit story overlook the fact that households must actually spend money for the story to hold, Mr. Beckworth said. And when you look at the massive increase in spending, it becomes clear to me where the causality lies. Mr. Edwards admitted that government stimulus measures implemented during the pandemic had an impact. And, he noted, this dynamic has shifted the burden of inflation to poorer households, while richer ones won't feel it as much. The richest 20% of income-earning households typically contribute for roughly 40% of total consumer spending. According to credit card statistics from prominent banks, overall spending on recreational experiences and luxuries looks to have peaked, but remains strong enough for corporations to continue charging more. As demand for vacations has surged as the summer approaches, major cruise companies, including Royal Caribbean, have continued to raise costs. Understanding inflation and how it affects you price drops. For more than 2 years, rapid inflation has been an issue in the United States, but the tide appears to be turning. Is the war over? While lower gas prices and slower food price adjustments have contributed to reduced overall inflation, Fed policymakers and many outside analysts remain concerned. Corporate strategies. Many large corporations have maintained pricing increases even while the cost of oil, transportation, food ingredients, and other raw resources has decreased. This could fuel greater inflation. McDonald's said that sales climbed by 12.6% on average per shop in the 3 months through March compared to the same period last year. Increased traffic accounted for around 4.2% of the gain, while higher menu prices accounted for 8.4%. The corporation blamed the recent menu price increases on increasing labor, shipping, and meat costs. Several consumer groups have responded by noting that recent increases in transportation and labor costs have subsided. In an email, A McDonald's representative stated that the company's outstanding performance were due not only to price increases, but also to strong consumer demand for McDonald's around the world. Other businesses have discovered that fewer sales at greater prices can nonetheless result in larger profits, a phenomenon termed by Mr. Rines of Corbu as price over volume. Colgate-Palmolive, which sells kitchen soap and other items in addition to toothpaste and has a roughly 40% share of the global market, had a strong first quarter. Its operational profit increased by 6% year-over-year in the year to March, owing to a 12% increase in pricing despite a 2% decrease in volume. According to Glenmead Investment Management Research, there is evidence that more consumers are cutting back on higher-priced items. Some businesses are encountering opposition from more price-sensitive customers. Dollar Tree reported higher sales but lower margins as lower-income customers who frequent the store looked for bargains. The company's stock dropped on Thursday after it reduced its earnings forecast for the rest of the year. Even PepsiCo and McDonald's have recently seen their share prices fall as traders fear that they will be unable to maintain current earnings growth. For the time being, investors are relieved that firms performed so well in the first quarter, which has kept stock prices from plummeting significantly. Before significant corporations began reporting how they did in the first 3 months of the year, analysts predicted that earnings at S&P 500 companies would fall around 7% from the previous year. Instead, earnings are likely to fall by approximately 2% after all of the numbers are in, according to FactSet statistics. Bank of America's head of U.S. equity and quantitative strategy, Savita Subramanian, stated in a note that the latest quarterly results once again demonstrated corporate America's ability to preserve margins. What do you think? Has corporate price gouging created artificial inflation, or has consumer spending created artificial inflation? Leave a comment below. Take care and remember that your money matters.